Question 4b had an average of 40%, which was below the overall exam average, and what we were asked to do was prepare the current liability section of the balance sheet at the end of April. So what we were given was a pre-adjusted trial balance at the end of April, and we've been asked to go and collate a list of current liabilities. So on the face of it, this should actually be reasonably easy because we know liabilities will be in the credit column. What made this a little difficult is that these numbers aren't correct. Some of them did change, and they changed when we made adjustments in question 4a. So what we want to do is just start with our list, and then we'll worry about the numbers. So the first one, that if we go from the top, that might be a liability is cash at bank. Sometimes cash is an asset, sometimes it's a liability. In this case, it's got a credit balance, so we're going to put that in. Next, we have Creditors Control. Obviously has a credit balance, so that will be in our list. We've got Gst Clearing. Now that usually we look at it and think that's definitely going to be a liability, but because it has a debit balance, we're actually not going to put that in at all. Going down, we have the loan. The issue here is we're only going to do the next 12 months, and we've got a figure of 120,000, so we don't actually know the number that we need. We also have prepaid sales revenue, which is a liability, so that should go in. And the only other credit we have is to sales, which is a revenue account. So that seems to be our complete list. So if we go forward, let's go and have a look at the additional information and figure out what do we need to do to these numbers to get it right. The first one we were told was there were drawings of 1,200 incorrectly posted to wages. So if we go and look at our answer to 4a, we didn't actually do anything that affected any of these ledgers. Our second adjustment was prepaid sales revenue of $2,700 has now been earned. We had the vehicle being depreciated, we had the vehicle being traded in, and then we were told the loan is repayable at a rate of $24,000. So let's just take our little list there of 4 current liabilities, go through each additional info point one at a time, and update our numbers as we go. So the drawings, as we said, they're not going to impact any of these accounts, so we'll move to the next one. That was our entry. Neither of those are liabilities, so we can move on. Secondly, we did prepaid sales revenue was now earned, so we did a debit to prepaid sales and a credit to sales. So what we actually need to do is change the balance of prepaid sales from $3,500, that's going to go down, so we're going to decrease that to $800. The next bit of info was the vehicle was depreciated, and we ended up getting an amount of $990. Now that's a debit to an expense and a credit to a negative asset, so neither of those will affect this list of current liabilities, so we can move on. And then we had the trade-in. So the trade-in required 5 steps. So what we want to do is go through our answer, look, when did we ever touch a liability? We did a debit to a sundry creditor, and then a credit to the same sundry creditor. And what's interesting is that that is not a liability that was given to us at the start, so we're going to need to add that in ourselves for $37,000. And the last piece of additional information was the loan is repayable at a rate of $24,000 per annum. So now we do have the figure that will be current. We know it's going to be $24,000. So now that we have those numbers, we can just go in and enter them one at a time. And then we make sure we use our second column to put our total. Looking at our marks, there's only 4 marks, yet there's 5 numbers plus a total. So let's have a look. We have 1 mark for cash at bank, 1 mark for creditors control and loan together, 1 mark for prepaid sales revenue, and the final mark was for putting in that new current liability called sundry creditor Kerr Motors. The mark breakdown for this question, basically a lot of kids got 0, had a bit of a tough time because a lot of the numbers that were given to us up front did change. And at the other end, only 12% of students were able to get full marks. The average was 1.6 out of 4, which is very low. And the examiner's comments are interesting. It says there's 5 entries for only 4 marks. Look, if something's 4 marks and you've only done 3 things, that's a good sign that you haven't done enough. But don't always think that because something's 4 marks, you only need to do 4 things. You may need to do more things than there are marks. Never less, but sometimes more. So in this case, students are reminded that the number of marks allocated to a question does not necessarily indicate the number of items to be identified. As in, most students or some students only put 4 items, and in particular, a lot of them would have missed the sundry creditor called Kerr Motors. And based on that, don't forget to include the bank overdraft and exclude Gst Clearing. So the tip there is to know that both of those can be assets or liabilities. So just make sure you know what does it mean when it's a debit versus what does it mean when it's a credit. And lastly, remember to carry forward the adjustments you made in question 4A, and these will affect the answers that you get in 4B.